SpaceX is in free fall. I mean, if you're holding this stock or even just watching it from the sidelines, today's price action is a massive wake-up call.
Oh, absolutely. It's brutal out there right now.
Yeah, the stock closed at $108.27 today. That is down a massive $17.06 on the session. We're talking a 13.61% drop in just a matter of hours.
And honestly, the terrifying part, the real panic hasn't even really started yet.
Right. It's wild because what we're looking at isn't just, a bad day for the broader market dragging things down.
No, not at all. We're watching a structural repricing of one of the most hyped public offerings in history.
Exactly. And the real story driving this drop is this toxic combination of massive post-IPO earnings disappointment, severe cash burn concerns regarding their new AI venture, and absolute panic over the imminent August 6th lockup expiration.
Which threatens to just completely flood the market with supply.
Right, which means we really need to dig into this today.
Definitely. This is Market Pulse Daily, where we break down the latest price action, catalysts, and market sentiment behind the stocks moving today.
And if this market update helps you, make sure to subscribe, like, and comment below with the stock you want us to cover next.
Yeah, before we tear into these financials, I want to mention that you can research the company behind today's move using StockOracle. There's a special 14-day trial link below in the description.
Highly recommend checking that out.
Yeah, StockOracle is this AI-aided stock research platform for fundamentals, valuation estimates, AI moat analysis, bull and bear insights, comparisons, watch lists, and portfolio research.
But just to be clear, right, it's a research tool.
Exactly. It's a research tool, so it is not financial advice or a recommendation to buy or sell or a trading signal service or real-time market data. And, AI insights and valuation estimates can be incomplete or just wrong. Data may be delayed, so you definitely should verify important facts yourself.
Always do your own research, yeah.
Right. And just so you know, that link is an affiliate link, so the channel may earn a commission at no extra cost to you.
Okay, let's unpack this. Because to understand why SpaceX is suddenly crashing, you really have to look under the hood.
Yeah, because from an investor's perspective, they're effectively three completely disparate businesses jammed together under one ticker.
Right, you've got the engine, you've got the furnace, and, well, let's start with the engine.
Now, looking at the fundamental catalyst, we have to start with Starlink. That's the engine.
Right, it's the financial powerhouse of the company. It generated $11.4 billion in revenue last year.
Which is huge.
It is, and with $4.4 billion in profit, it's a cash machine. But then you look at the legacy commercial launch business, the Falcon 9 rockets that made them famous, and that actually lost money.
Which is always a tough pill to swallow. I mean, you see these amazing rocket landings, but the physical infrastructure costs are just staggering.
Yeah, but honestly, a money-losing rocket division is like a rounding error compared to the real fundamental weight dragging the stock down.
The AI business.
Exactly. The AI business they absorbed in the February XAI merger. I mean, this is the furnace. It lost $6.4 billion last year.
Ouch.
And wait, it gets worse. In just the first quarter of 2026 alone, they lost another $2.5 billion.
That is just incredible cash burn. It's like they took a highly profitable internet provider and strapped it to a cash-incinerating AI rocket.
That's a perfect analogy. Seriously, you have to wonder if the core business can even survive this kind of burn rate.
Well, the severity of the cash burn is the big question right now. I mean, AI capital expenditures are running above $30 billion annually.
$30 billion just on AI infrastructure.
Yeah, a year. Because it's not just software, right? It's data centers, tens of thousands of GPUs, massive power requirements, and they're funding this by siphoning off Starlink profits and chewing through the historic $75 billion IPO proceeds.
Which is putting massive pressure on the balance sheet. I was looking at it, and they have almost twice as much debt as cash right now.
Right, highly leveraged. And when you're burning that much, you need hyper growth to justify it to the market. But growth is actually slowing down.
Yeah, total company revenue decelerated from 33% growth last year to just 15% in Q1 2026.
Which really spooks investors. And then you look at the unit economics for Starlink, and the average monthly revenue per user, the ARPU, dropped from $81 to $66.
Wait, why is ARPU dropping that much? Are people canceling?
No, they're expanding, but they're expanding into lower-priced overseas markets. They've tapped out the early adopters in the U.S. who will pay a premium. So to keep growing subscriber counts, they have to lower prices to match local purchasing power.
Oh, right. So volume goes up, but margins get squeezed.
Exactly. Gross margin still looks okay at 50.82%, but the net margin is deeply negative at negative 31.28%.
Yeah, and that leaves trailing EPS at a negative 0.74577. It's rough.
On the news cycle side, this fundamental tension has completely destroyed the stock's technical setup.
It really has. I
Mhm.
mean, we're looking at a stunning 52% collapse from the June 16th high of $225.64.
Half the value just gone.
Poof. The stock is currently hovering just 3.3% above its 52-week low of $104.83. And for anyone who bought the IPO, it sits 20% below its $135 IPO price.
That's gotta hurt, especially given how volatile it is.
Oh, the volatility is insane. The beta is sitting at 5.36 right now.
Which means every market move is amplified over 5 times.
Exactly. And even after this massive drop, the price-to-sales ratio is still elevated at 46.07. You're paying $46 for every dollar of sales.
For a company laying concrete and building rockets, that's a software multiple. No wonder the analysts are so deeply fractured right now.
Oh yeah, Wall Street has no idea what to do with this stock.
Morningstar places fair value in just $63, which is a 53% discount to the IPO. They're clearly looking at the cash burn and panicking.
But then on the other extreme, you have Cantor targeting $246.
Right. And Macquarie sees $250. They're actually calling this current drop a prime entry point.
It's just wild how polarized it is.
Yeah.
And that polarization is playing out on the trading floor too, because short sellers control a massive 29% of available shares.
Which brings up a fascinating contradiction. What's fascinating here is that while the shorts are piling in, insiders have bought roughly 3.5 billion shares over the past 90 days.
Wait, really? Insiders are buying while it's crashing?
Hand over fist. It creates this massive tug of war between institutional short sellers betting on bankruptcy and bullish insiders who clearly see something we don't.
Now let's weigh the bull case against the risks, because the downside risks here are immediate.
Very immediate.
Let's talk about risk one, the supply flood. This is why everyone is panicking right now. When SpaceX IPO'd, they only sold less than 5% of the company.
Right, which created this artificially scarce float. Everyone wanted in, but there were hardly any shares to buy, so the price skyrocketed to that June high.
Exactly. But on August 6th, that scarcity vanishes. The lockup expiration hits, and roughly 911 million shares, which is worth around $116 billion, become eligible for sale.
That is a staggering amount of equity hitting the market at once.
If the market cannot absorb this, the price could just crater further. I mean, how do you absorb $116 billion in supply?
And don't forget, plus another 40% of the company unlocks in December.
Oh, man, yeah. So that's risk one. Then you have risk two, AI solvency, which we touched on, but it's the massive execution risk of spending $30 billion a year on AI with completely unproven returns.
Right, they're going up against massive incumbents in the AI space. It's not a guaranteed win.
So what's the bull case? How are insiders justifying buying 3.5 billion shares in the middle of this?
Well, there is a very real path to recovery. First, SpaceX has a dominant commercial launch mode. They're actually turning away outside Falcon 9 customers after 2028.
Turning away paying customer.
Yeah, because they need all the launch capacity for themselves. They own the orbital delivery market. But the real upside is in the AI compute side.
The furnace, as we called it earlier.
Right, but the furnace is starting to generate heat. They just secured a contract with Google for $920 million per month.
Per month. That's nearly $1 billion every 30 days.
Exactly. And they have an Anthropic agreement for all the capacity at their Memphis data center.
Okay.
If they execute on this, that $30 billion capex starts to look like the foundation of a monopoly.
Wow, okay. So that revenue could really change the narrative. What are the catalysts to watch to see if this bull case actually plays out?
The biggest near-term catalyst to watch is the impending August Starship test launch.
Right, because if that succeeds, it validates what analysts are calling the orbital data center thesis.
Yes, and we should explain that because it sounds crazy, but it solves the cooling and real estate bottlenecks of AI data centers by literally putting them in space.
It sounds like sci-fi, but space is super cold, so cooling is free, and there are no zoning laws.
Exactly. Now, Morningstar currently gives that thesis only a 7% probability of working out.
Only 7%. But if Starship flies...
If it succeeds, that probability jumps. And if Q3 earnings show the Google revenue is starting to narrow those AI losses, the momentum could violently reverse upward. You could see an epic short squeeze.
So what should investors watch next? Let's just summarize this real quick.
Sure.
SpaceX is currently trading at $108.27, and it's under the massive shadow of this August 6th share unlock and the heavy AI cash burn.
Yep.
But they also have a dominant launch and satellite internet franchise. So the key watch points are: how well does the market absorb the lockup supply? What happens with the upcoming Starship launch? And can Q3 earnings confirm that AI revenue?
Spot on. And it really leaves you with a final thought to chew on.
Yeah.
If the AI infrastructure build-out requires this much capital, literally straining one of the biggest IPOs in history, are we witnessing the creation of the most powerful technology conglomerate in human history? Or the most expensive misallocation of capital the public markets have ever seen?
That is the multi-billion-dollar question right there. Wow. Well, remember, you can research the company behind today's move via the special 14-day trial link below in the description for StockOracle.
A great way to dig into those numbers yourself.
Exactly. It combines fundamentals, AI, bull and bear insights, and valuation estimates. But again, it is not financial advice or a buy or sell recommendation.
And remember, AI estimates may be wrong, so always verify your facts.
Yes, and explicitly, that is an affiliate link that supports the channel at no extra cost to you.
Awesome. Well, make sure to subscribe for more fast market updates and comment below with the next stock you want us to cover. We'll see you on the next Deep Dive.